Okay, we're recording. Hello, everyone, and welcome to tonight's call. It is Tuesday, December 9th, 2025, and this is the Triangle Blockchain Development Call we have normally first Tuesdays of every month. Now, tonight there's a little something special. We have Eric Moore tonight. Eric is going to give us an update, some more information that he has on Sears. So without further ado, Eric, by all means, take the floor.
Hey, am I muted?
No, I hear you fine.
Okay, good to go. Hey, what's going on, everybody? We are here back from our last update in July 2025, if I'm not mistaken. So it's been a long time. Maybe 5 months. So we're coming at the end of the year. And if you remember last year, we did an update. Was it Christmas Eve, Blair? I think it
Yes, I
was
believe it
Christmas Eve
was.
of
It was
last
like
year. Yeah,
December 23rd or 24th, sure.
yeah, we had a great time.
Yes.
It's been another year since then. So roughly a year since that update. So I'm going to briefly go over a little bit of what we discussed in the last YouTube video. And I'm going to look at my clock, and Adrian's going to put a image on the screen that you guys can see from the previous presentation. And I'm going to try to get everybody to confirm later in question and answer, which is going to be really quickly because I'm going to answer a lot of questions because I've got a lot of emails over the last 2 to 3 months, and they're basically the same questions, or I'm getting people emailing me information that's not relevant to when we get paid, how much we get paid, and who pays us. So I want to make sure that on this call, we cover that and everybody kind of knows where to focus. I know this seems complicated, but the complicated part of this case has probably been over for about 3 years. What's complex about bankruptcy is you can go into a bankruptcy case with a legitimate debt. You could be secured by a piece of property, by cash, and due to how loose the attorneys can be and how corrupt in some cases the judges can be, you can still not end up with what you're entitled to. So there are a lot of cases. Um, there's a big case now that we're involved in. Some of you on this call are involved in with J.C. Penney. When you get some time, Google Judge David Jones scandal or Judge David Jones bankruptcy judge scandal or relationship, or Judge David Jones Jackson Walker, and you'll kind of get an idea of what's possible and what's unfortunately kind of common in bankruptcy cases. So I did receive some emails over the last couple of years, and they were, you know, emails similar to, questions along these lines. You know, what protects us from getting, uh, you know, uh, screwed over by the trustee or by Eddie Lampert or by the trustees that are holding our cash, or what protects us from getting paid. So in this case, Sears Holdings, as everybody here knows, was a holding company that owned a lot of real estate, um, brands, Kenmore, Craftsman by Sears, Die Hard, Innovel Solutions, um, lots of leases on properties, Sears Auto, Sears Home Services, Shop Your Way credit card, lots of other businesses. And the most valuable of those assets mainly was the real estate. You want to sell real estate, um, 15, $20 billion worth of real estate that you have very little cost basis in, you're going to have a big, big tax bill. But the tax code, as well as the bankruptcy code, provide for you to liquidate real estate, businesses, cash, other things on a tax-free basis, providing that certain requirements are met. And this process is called a 368 AG1 reorganization when it's in bankruptcy. So it's a 368A1 reorganization. So as you guys are familiar who've been with us for a while, and I won't get into the deep legalese or anything like that, but I'm going to say the disclaimer. I forgot to say it initially. But the information that I'm providing here is not deemed to be legal advice. I'm not an attorney. I'm not a financial advisor. I'm not a broker. And everyone here, and whether you get an email from me, whether you're on a Zoom, whether I comment in the comment section, you're to take your own responsibility for your own investments. And I'm not your financial advisor. I'm not your fiduciary. I'm sharing some information, some of my research, and you're investing at your own risk. And not here to manage anyone's money, take any broker fees, or anything of that nature. Just as some of us here are in real estate, some of us here on car lots, some of us are in this group are medical doctors. I see a few of you here. Some of us are professors at universities, majors, minors, and the like. Some of us are just entrepreneurs, so on and so forth. And we can share ideas, we can share information with each other, but I'm not a fiduciary of any person here. So everyone's taking full responsibility for their own investments and what they're doing. So with that being said, where we are right now is I sent out an email roughly November 23rd, 2025, and I sent an overview of what we were waiting on. People keep saying, well, what's taking so long? And I have a friend, she could be in the chat. She's a pediatrician. She's delivered a lot of babies, assisted with a lot of babies, done a lot of resuscitations, etc. And we were talking some time ago, and I was explaining to her my challenge with giving people an idea of what is too long or what is too short. If you don't know how long it takes for a woman to become pregnant and give birth, you might think a month is too long. I think 2 months is too long. You might think a week is too long. So when you're liquidating 1,000 stores and possibly 500 to 1,000 pieces of real estate, half of it during a pandemic, during high inflation, during two presidential administrations, and in one administration where the interest rates and the tariffs and all these things go. So all of these things affect liquidating a large company such as Sears Holdings. So the most important thing to focus on right now is what's left to be done by us. And there's nothing left to be done by us. But wait, that's it. The math that we showed in the last YouTube video is from all publicly available documents. So the only people that have to be paid before Sears bondholders get paid and then Sears stockholders, it's the Sears pension, roughly $800 million. And once that's paid, because everyone else has already been paid, once that's paid, the Sears bondholders are collectively owed about $700 million. And the surplus left over goes to the shareholders. And the last YouTube video, we showed proof that more than $12 billion in cash and remaining assets were there. So the Sears pension is only $800 million. So the balance of that money, with the first $700 million going to the bondholders plus interest, the rest of the money goes to shareholders. So that's where the case is mathematically. So what you don't want to do is follow the bankruptcy case. You want to follow where our assets are. So I've gotten emails, especially if Wyco Researcher and some of the other people may post something about the wind down, the time frame for objection to claims in the bankruptcy case. Our assets left bankruptcy February 2019. So as we discussed in the last presentation on YouTube, that's up now, you can liquidate a company inside of bankruptcy or outside of bankruptcy. When you liquidate outside of bankruptcy, the bankruptcy estate, which is called the wind down estate, once the assets leave, has absolutely nothing to do with us. The objection deadline in the bankruptcy case could be extended to 2050, 2060, the year 3000. The only money that's left in the wind down estate is to pay the attorneys, close out a couple of minor lawsuits. They funded the wind down estate with $240 million. That money was funded from the sale of some of the first assets in the case. If you're following the bankruptcy case, you're wasting your time. There will be no announcement from the bankruptcy estate or the SRZ liquidating trust because our assets aren't there. What you want to do is focus on the Transform Co. website and the Transform Co. real estate website because they announce when they sell properties, when they sell businesses, and they've been doing that since 2019, 20. So as of March 2020, Eddie Lampert announced that the company was debt free, except for a minor amount of real estate. So the issue becomes now is where do you put your focus? If the stock is worth $100 a share and you have 10,000 shares, you're going to have $1 million worth of stock. You don't want to treat this like a lottery ticket and not know what to do. And I realized from some of the emails over the years, a lot of people are very unaware, if you will, about what to do with stock. So I'm going to say this, and then we're going to do a couple of more things. We're going to put a chart up, then we're going to take questions. Anything you can do with a piece of real estate, you can do with your stock. You want to make sure that whoever you're taking advice from, whoever that is, that you don't want them to just have a big name, so to speak. A big name like Bear Stearns, Lehman Brothers, companies that were bailed out or went completely to zero by the government. That doesn't mean anything. You need to know enough about your investment so you know if you should hold, if you should sell, if you should borrow against it, et cetera, et cetera. You need to know those things. And part of the challenge here is we have 95% of our group are highly intelligent people in all types of fields. But what I've learned is that people do not want to put forth much effort when it comes to learning and understanding their investments. They just don't want to do it. So what's challenging to most people is they want incredible returns, but they don't want to do even a little bit of research. We've provided all the information there on YouTube, and you don't have to do a deep dive anymore. What you have to do is stay away from the misinformation and don't take 20 people appearing to agree with something online as some type of consensus, right? Don't take the information you're getting from AI as the truth. If you don't have enough information or the proper input, you're going to get the wrong output with AI. And AI is so new that there's so little information about cases like Sears Holdings and what's going on. If you don't know what information to put into ChatGPT or whichever AI software you're using, you won't even get the right information. If you put in ChatGPT right now, or Blair says, do the former shareholders and the former bondholders of Sears have any interest in Transform? They'll say no. But if you say, does the plan provide for two trusts to be set up that will pay the former shareholders and the former bondholders? They'll say absolutely yes. And if you don't refer them to document 892, document 2886, AI can't go through the transcript and read through and decide what was you don't know what to input because that information isn't in ChatGPT. So a large amount of the research I did on Sears Holdings, which is my longest case to date. So I've done more research on Sears Holdings than any case I've ever worked. This is my 30th year working bankruptcy cases, 30th. And our challenge has been stopping people from following the misinformation. And I forgot whether it was Blair or whether it was Adrian, but somebody said, Eric, it's almost like they're going down this road of misinformation and we're spending our time disproving the misinformation instead of giving them the facts, and they follow the facts and see where they lead. So I'm not saying that you should not look at other information. But what you need to do is make sure that you show up to the misinformation with what the actual facts are. So we did a document more than 3 years ago called the 19 Facts versus Fiction. And in that document, we covered the top 19 misstatements, misinformation about Sears Holdings. And in the footnote, we put the actual proof that it was untrue. That document is unrefuted 3, 4 years later. We have people on Stock Twits, Seeking Alpha, Yahoo Finance, and they all say that their money that we're supposed to be getting paid, the new stock we're supposed to be receiving, they say it's just something I made up. This is 30 years experience. So earlier, maybe 45 years ago, they said, hey, you've never found a great investment in bankruptcy. I showed proof that I was in General Growth Properties very early, great bankruptcy case, 30 to 50 times the money. There are probably a couple people on this call that might have been in General Growth with me. It's on my Facebook timeline. It's timestamped. I just put the information up there. Then they said I was bragging about how great I was doing in investing when I showed the proof. So it's important to focus on understanding the facts and the basics. And one of the basics I think a lot of the people in our group and online misunderstand is bondholders get paid first. Secured bondholders get paid first. Unsecured bondholders get paid next. Shareholders get paid last. As long as there's enough money, it doesn't matter what order you get paid in, as long as there's an actual surplus there for everyone to be paid. So in this case, the surplus is there. It's there, in abundance. They're producing the information, the financials, and showing how well everything is doing. Is the case complicated? And I'm going to say no. I'm going to say that Sears Holdings has more misinformation about it that cannot be easily verified by a non-professional than any company I've ever read about or heard about. That is the difference. The crowd in GameStop was betting on a short squeeze because it was easy to see how much the short interest was, how many people were betting against it. There wasn't a crowd of people saying that the company wasn't heavily shorted, because you can Google what the short interest was. So the crowd was on the right side of the information, and nobody was fighting against them. In our case, we're not the crowd. We're the people with the facts and the information, and the crowd must benefit from the negative information. You look at any bankruptcy case in the last 5, 6, 7 years, nobody's online talking about it. They're only talking about Sears Holdings because they know. So we extended an offer initially for some of the people, alleged Wall Street titans and heavyweights and other people behind the scenes. We offered $10,000 for them to debate in front of a bankruptcy judge. No money from them, $10,000 escrow from our group. And if they disprove that Sears Holdings bonds and stock are whole and we're getting paid, they get the $10,000. They don't have to put up any money. We got no takers. We went up to $50,000 this year, no takers. So I want everybody to be clear that if you're online and you're listening to these people say it's not working, who turns down $50,000 to debate to prove that they're correct? And I even offered and allowed them to have a bankruptcy attorney represent them in front of the retired bankruptcy judge to receive $50,000 to simply disprove the 19 facts or disprove that the money's not coming from the wind down estate. So you'll learn over time that great investments will have a large group of people betting against them, or there'll be no conversation at all. So what I'm encouraging people to do this year is to rewatch the YouTube videos and ignore the bankruptcy case. Don't send me or Blair or Rod or Adrian anything happening in the bankruptcy case, because we're not in bankruptcy anymore. We're a part of the purchaser group as creditors. We're part of the purchaser group. So you need to follow the purchaser group. The purchaser group is Transform Co. Real Estate Properties and Transform Co. the website. Because Eddie Lampert also owns Lands End, AutoZone, Seritive Growth Properties. The fact that Sears Holdings merged with ESL Investments, we will also have an interest in Lands End, Seritive Growth Properties, and AutoZone. And what we're waiting on now is for a merger or an acquisition of a public company by Transform, our company, which we have an interest in, to go public, either a reverse merger with Lands End or reverse merger with Seritage Growth Properties or both, or AutoZone or some other company Eddie Lampert decides to merge with. So you should follow Lands End, LE, Seritage Growth Properties, stock symbol SRG, AutoZone, AN, because those are the entities that Eddie Lampert is in control of. When Warren Buffett did a very similar liquidation and reorganization like this that formed Berkshire Hathaway, he merged both of the companies into the public company that he was already, in charge of. And it looks to be that's what's going to happen here. And if that happens here, you want to own Lands End, you want to own Seritage Growth Properties, and you want to own AutoNation most likely. So that is the key. You want to follow where the money is. You don't want to be looking at the bankruptcy estate. You don't want to be reading stuff about what's happening in the bankruptcy case, because our assets, our cash, our payout does not come from the bankruptcy estate. It comes from Transform, and the new holding company is called Hoffman Topco. It's called Hoffman Topco. That is the new holding company. That was the name of the area of the Sears home office, which we sold recently for a lot of money. So the money to pay us is there. The bonds are still available, roughly, $20 each. The payout on those bonds is more than $1,000. And I don't suggest people buy, sell, or hold any security. I'm still buying the bonds, but that's my choice. But another question is on time frame. We know that Eddie Lampert Lands End announced that they were in negotiations with Lands End about a merger, a sale, or a stock exchange. That's exactly what we need to complete to be paid. That was announced in, was it March or April, May? I don't know. But it was announced a few months ago. Seritive Growth Properties made a similar announcement more than a year ago. Don't know how long that's going to be. But when the announcement happens, it's going to be the largest story on Wall Street. It'll be the largest recovery, largest payout from top to bottom of any stock in history in that time frame. It'll be bigger than Berkshire Hathaway, because some of us got the stock at 1 cent, 2 cents, 3 cents, 5 cents, 10 cents, a dime. Some of us got bonds for $10, $15, $20, at most maybe $25. So people don't make 40 times their money on a bond. You can only make very large amounts of money in something that other people miss, or you can come late. So like right now, everybody's excited about AI stocks, but if I can't value it, I don't buy it. 5, 6, 7, 8 years ago, everybody was excited about marijuana stocks. If I can't value it, I don't buy it. But by the time everybody is talking about it, you're too late. You want to be in something you understand, and you want to know at least the basics of what a stock is and what a bond is. And I realize that some of our really high-end professionals here have had brokers and financial advisors who have not given you even the basic amount of knowledge. And you must be worried about a person who's not a teacher or an educator that's managing your money or handling your money. I don't manage money. I'm not a broker, but you need to know the basics. You need to know the basics. You need to know how to value a company. You need to understand what value investing is and why it's different. And you need to ignore the price of something that just fluctuates up and down. But if you don't know what it's actually worth, you're going to panic. But I heard Warren Buffett say this: if you're not willing to own it, if it drops 50%, you should never buy it. So you want to be very, very aware of what's going on, because it's possible they could make this announcement tomorrow, next week, next month, and the next 2 to 3 months or less. And you look up in your account and the money that keeps popping up in our E-Trade account saying we've got 20 million, 50 million, 100 million, a billion, and it's actually there. You don't want to just push sell on your stock, and you don't want to take advice from a person who cannot inform you correctly or who has a conflict of interest. You want to actually know what you own, and you want to know the tax consequences of the action that you're taking. We got tax professionals that are in our group. Several of them include my partner, Tunisia. We've got Sandra and like high-end tax professionals who deal with very high net worth people and businesses, et cetera, et cetera. So you want to make sure that you don't take an absolute incredible opportunity like this that you've been a part of and you mess it up tax-wise, and you're calling us a year after or 6 months later going, why do I owe the IRS $3 million? All I did was sell all my stock. You want to know how to borrow against your shares, how to protect yourself against a decline in the stock. You want to at least know the basics. If you think it's easy to hold on to 5, 10, 15, $20 million, you think these athletes, you just think some of them are stupid. You think some of the lottery winners are stupid or dumb or slow. Some of them are, but professionals go broke at the same rate. Educated people who get 5 and 10, 15 million go broke at the same rate as some of the lottery winners. So just keep that in mind. The level of people and the level of con that approaches you when you have 5 or 10 million, you probably aren't ready for it. Because they'll con you and you won't know you've been conned. You'll just know you're out of your money. And you might, anyway, I won't go there. So Adrian's going to put this chart up very quickly. Then I'm going to take some questions. So Adrian's going to put this chart up. Okay, so this is the chart here. Hold on. Adrian, check your email.
I saw one. I'll check again.
Okay. So what we're doing here is this is the chart. The middle chart is the SEC SRZ liquidating trust. It's run by I think William Murphy is his name. This is where some of you were calling. Our money is not there. Our money is on the left and the right side in these other two trusts right here. So the person you're calling is not holding our money, and he's handling the remaining parts of the bankruptcy estate. That's what he's doing. There's nothing happening at the bankruptcy that has anything to do with us. Nothing whatsoever. Nothing at all. So your focus should simply be on the affiliated businesses, Lands End, and they had a call today. They're doing absolutely incredible. Stock went down today. You can't predict what's going to happen, whether a stock goes up or down. Who knows? Enron kept going up, and it was worth maybe 50 cents when it was trading at $100 because it was running a scam. Sometimes people just get excited about companies. Everybody was excited about the internet. So all the .com companies went way up, even the ones that were worthless, even the ones that had no revenue or negative revenue. Right now, everybody's excited about AI. All those companies are not valuable. You think about how many companies went public during the .com era versus how many actually survived and how many actually dominate now. It's 5 or 6 companies online that control 75% of the revenue. Maybe it's Google, Facebook. What's the other big one up there? Google, Facebook, Apple, Netflix, Amazon is, yeah, maybe it's still 5 or 6 out of 1,000. So you don't want to be speculating. And if you are speculating, you need to know you're speculating. And you don't have to understand all the complications of Sears Holdings. You need to understand what the misinformation is and ignore that. This information here, all of the facts that are up here, nobody I know online is refuting the people. They might read the misinformation, but they won't say, hey, have you taken a look at this? And I'm not saying you should be debating these people or in fights or arguments with these people. You shouldn't be. But you also shouldn't be wasting your time watching the misinformation, especially if they're talking about anything concerning the bankruptcy estate. I bet you in the last 4 years, nobody can point to a comment where they're talking about Transform. The first thing they say is, we don't own any part of Transform. It has nothing to do with us. But they will not point you to a document. And what you see on the screen right now, this is a drawing based on what the court orders say. And if you go below, you can click and it'll take you to the court order that says it. So this is not something I'm making up or something I came up with. And most people, I've learned this through this process, they don't believe they deserve an absolutely incredible opportunity. If they believed it, or they need a crowd to tell them, they will go all the way to the gates of hell and jump in if they believe the crowd thinks there's a fortune down there. But to be in a small group of people that participate in something that's probably once in a lifetime, it's off-putting to them. It's difficult. But if you think about the Big Short movie, there are not 1,000 people who made money on the Big Short. Might be 12, 11. There aren't 1,000 people who made money on GameStop, like real money. Might be 50. And the people who made the big money, 8, 9 of them. So great opportunities don't have crowds. The crowds come after the great opportunity. The crowds come after the great opportunity. The crowds are in the scams. The crowds are in the stuff. You know, they're in the Cabbage Patch dolls. They're in the Beanie Babies. They're into the .coms when it's too late. They're in the .coms when it's high risk. And a lot of those people do make money, but not in mass. They have to show you some people winning in order to entice you to put your money in. Nobody can show you you're winning with Sears. It takes real work. The work I put into this, me, Blair, Rod, Adrian, Raul, Henry, our core group of people, Patrick and Nelson, and some of the people on the call also did a lot of research. I've been in Sears Holdings since 2016. This is my 9th year. I don't know anything better than I know Sears Holdings. And I've never seen an opportunity this incredible. And I don't expect to see one like this. But I don't want to look up a few months from now, if the payout happens tomorrow, next week, next month, I want to feel like I did some good by spending this time, this energy and effort, and I want to make sure people do good with it. I don't want people to be conned or tricked out of Wall Street, out of your money, when you had a chance to be an opportunity like this. That would be really disappointing if Wall Street didn't bring you to the opportunity. So why would you go to Wall Street? I had somebody that's probably on the call tell me that at $100 a share, they might end up with 20, 30, 40 million dollars. And they say the first thing I got to do is find somebody from Wall Street to give my money to. And I said, oh, wow. I said, the first thing the person from Wall Street is going to say to you is, how did you get the 30, 40 million? And if you got the 30, 40 million through some other ideas or through another group, the guys in Triangle Blockchain and our people, why would you go give that to somebody who never made you any money? So I realized from that conversation, I've had several like it, that most people don't know what to do. They will go to a stranger, not the group that financially educated them, put them into the opportunity, or not even somebody affiliated. They're looking for someone outside to give it to. But if that person didn't get you there, or that group didn't get you there, it just wouldn't seem like it would make much sense. Most people lose money in investing because they're irrational and they need to be in a crowd, and they're extremely lazy. They want to do 1 minute of research and they want the stock to go up every day. They think they're losing money when the stock is going up, and they think they're making money when it's going down. I mean, or vice versa. They think they're making money when it's going up and losing money when it's going down. And that's simply not true. You must know the actual value of what you're purchasing. And this, I promise you, is going to be very difficult for people to even believe a few years from now, after this payout, if it happens in a week, a month. I'm hoping that we are done by mid-March 2026. I'm hoping that. I don't know the date. It could be the end of 2026. But I know that based on the math and the numbers, it's the best opportunity I've ever seen. It's unrefuted by anybody online. Nobody on Wall Street will come even debate for $50 or even $100,000 to disprove this stuff. So don't spend your time reading misinformation. Read the facts, try to understand the best you can, and ask those questions. But don't sit around and simply wait on a payout and you don't know what to do after the payout. Definitely make sure you're being financially educated on what to do with stock, what not to do, whether you should sell, whether you should hold it, the tax consequences. You have to prepare to be wealthy or you're going to be broke. If you think you can't blow $3 million to be conned out of it, you go talk to some people who it's happened to. And a lot of educated people get conned, legally conned. They don't have to do anything illegal to con you out of your money. You want to make sure you're being financially educated and you're preparing to have wealth. Because if you own more than 10,000 shares, likely you're going to have more than $1 million. If you own more than 20,000 in bonds, you're going to have more than $1 million. And you want to be in a position where you don't sell this year if the company is still undervalued when you buy it. But if you don't know anything about valuation, you might think about what you could do with $1 million, but the company might be worth 8 million when it's trading at $1 million. And eventually it'll get to that 8 million. So if you sell January 2026, if they paid us on Christmas and it's undervalued, and by the end of the next year it's worth 8 million, you're going to feel crazy. So you want to make sure you're educating yourself and you're reading and studying when you get time. YouTube videos by Warren Buffett, Bruce Berkowitz, Eddie Lampert, Bill Fisher, Charlie Munger, people who understand value investing, people who have held wealth for years, not fly-by-night people online who are traders all of a sudden, or people with big YouTube followings. You want to make sure you're preparing to be wealthy. You don't want to just sit around and say, I hope it happens in a couple of months. If you probably don't know how to manage $3, $4, $5 million. You probably don't know that with $5 million worth of stock, you can get anything you want without having to sell your stock. You probably don't. So you want to make sure you're talking to people without a conflict of interest, people who have your best interest in mind, that are actually going to explain it to you so you understand it. And you want to make sure you're not lying to yourself and just letting people, quote, manage your money or your, quote, investments, make a percentage, and you don't know what's going on. So Sears right now, that's all we're waiting on. We're waiting on a merger of transform the real estate entity or transform the operating company to merge with a public company. So I think those companies are going to be Lands End, Sears Growth Properties, or AutoNation. Could be some other companies, but Eddie Lampert controls all of those companies. And most of the time they merge with companies under common control or affiliates because there are tax benefits. And it's also easier to go public with a company you control than to go approach somebody where you don't have a large ownership or influence and say, I'd like to merge with you. So that's what we're waiting on. There's nothing else to do. There's nothing wrong, nothing else to be done. But in the meantime, we continue to liquidate the assets. But we have enough cash and enough assets to pay all the bondholders in full, the pension in full, and to pay the shareholders an incredible fortune, especially the people who paid less than $1 for the stock, which is everybody here on the call. There's nobody here except people who bought stock prior to the bankruptcy that paid more than $1. So that's the key. The wind down estate and the bankruptcy case has nothing to do with us. You don't need to follow the bankruptcy case because nothing happened there. No dates being posted. Anybody talking about the bankruptcy estate online are giving you misinformation. Some of them are doing it on purpose, and some of them just don't know any better. I think that's it, Blair. We have any questions?